Morning, everybody. We are Signal Centre Talking Ball. It's the 12th of November. I'm Joe Neighbour, joined by Steve O'Hare for the last show of the trading week. How you doing, Steve?
Yeah, not bad, thank you, mate. Got a busy week next week actually, but sort of out
Out
of
of
the
the
virtual
office.
room. Yeah,
Not sure how we're going to manage next week.
we're going to struggle, aren't we?
Yeah,
We'll soldier on though, Joe. I'm sure.
indeed. Um, cool. So, what's going on in the markets? There seems to be a little bit of geopolitical tensions rising, certainly with regards to Russia and Ukraine. News, according to Bloomberg overnight, that Russia may be weighing an invasion of the Ukraine. The US told its European allies as it's watching a military build-up near the Ukrainian border. This comes amid heightening tensions between Moscow and Europe over migrants and energy supplies. So it's obviously the last thing we need. Markets don't seem too rattled by it at the minute. We've been here before with this scenario, which never led to anything. I think it was de-escalated fairly quickly, but we'll see what the intentions are this time round. Emmanuel Macron and Mario Draghi plan to fill the void left by Angela Merkel, coming on the back of her departure from leadership. The two had dinner the night before Draghi's 74th birthday in September and have spent almost 10 hours in bilateral meetings since then. What else have we got going on? Doesn't seem to be an awful lot. It was obviously a quiet day yesterday with the US market shut for Remembrance Day or Veterans Day, as they call it. So I guess we can get stuck into some charts, Steve, straight
Yeah, why
away.
not? Mm.
What is catching your eye this morning? Anything in particular?
Um, I'll run through them now. It's oil. We're sort of seeing a bit of a reversal. Remember,
So you
we're
want to
talking
start with
about this.
commodities, yeah?
Yeah, commodities, please.
Lovely.
We're starting. We've obviously got this impulsive move higher, which we've been talking about for a long time, over a year now. This impulsive move that we're seeing move. We think we're in the fifth and final wave before we get a correction, which is normal in markets from a technical perspective. We've seen this is the third negative week and third negative candle. So for a weekly charts, that's given us a little bit more confidence that we are going to see a deeper correction. Obviously, this can, this is a rapidly evolving, changing type of asset. So this can be influenced by the geopolitical tension we're seeing as well. So be careful with this one. We've had this bullish channel in the daily chart. We broke down below it. We've retested it and rejected it again. This bearish outside candle that we mentioned on the 10th has led the way. Yesterday was a little bit indecisive. We didn't really get the follow through to the downside. So maybe there's a little bit of hope for the bulls of the market. Volumes are pretty high as well. Now, normally when you see quite high volume on this really small indecisive candle, that could be a sign that actually the bulls are willing to sort of enter at these levels. So we've had the sell-off, which was quite high volume, but the bulls or the buyers are sitting in the wings and waiting. So it may not be a straightforward correction for the bears. That's for sure in the oil markets. This bearish channel that we highlighted a few days ago has tested the downside and now tested the upside, and we're about right smack bang in the middle. So really we can see that previously when price action has got to these levels just around about the $80, it's acted a little bit like a pivot level. So a clear break below it, and we should extend further down towards retesting 77.50. If we manage to hold on, we could get back up and retest the $84. So right smack back in the middle on crude oil. Brent, very similar sort of situation. We did have a sort of bigger test of this channel on the upside, and it failed. Shooting star candles on the 4-hour chart led to a reversal, and we're back in the channel now. Bearish momentum we're seeing, but that bearish momentum is stalling ever so slightly. So again, are we getting buyers coming in around about this 81.50 level? Natural gas has reacted higher, and we talked about this earlier in the week, where we saw the reaction down to this 485 level. The previous swing high was around about 495, and the reaction from here has been pretty positive so far. And we can see the daily chart has now posted a morning star reversal formation. So that's bullish formation. We had a good day yesterday. Volumes continue to drop though, so be a little bit careful with this one. Support coming in just around about the $5 mark. And really this will be looking to project higher. So we remain in this descending wedge formation. This is the channel which we had drawn, and we can see how well it's been supported by the horizontal and the downward trending bottom of the channel. So, but again, look at the sort of like volumes declining, the momentum also declining. So, as price comes off, so is that a sign of bullish divergence? Quite possibly. Watch out for the natural gas. Gold has, as we spoke about yesterday, it's broken above the real key resistance level we saw that on 4 occasions previously fail at 1834, and we've projected high above it. Within a few hours it had moved about $35 to up to 1870, stalled there, and we saw price action move back down lower. But yesterday was a positive day for gold, and we're expecting slightly more of the same today. No reason really for it to slow down on a short-term basis. We are looking to buy dips, or there is a good reason to buy dips around about the 1850 level. 1834 for me is the key level to watch over the coming days in gold. Moving on to, let's take a look at cryptos. What's this bad boy doing? We hit the high of 69,000 in Bitcoin. Still really feels like it's hanging about up here, waiting for the next bullish wave to hit. The one thing I did highlight, and the one thing I am going to be looking out for, are these high volume candles. We see them on multiple occasions, and it's normally after a bit of a sell-off. So if we see any sort of high volume candle come in, as you can see here, it's after a sell-off. It slows the down move down, like we had at the extension higher here, up to 65,000. And when we got the high volume candle, that's a sign that buyers are re-entering the market. So we see great volatility on Bitcoin over this period of time, with elevated volumes around this area. But as you can see, we can even see almost a doubling in price on low volume. That's just a steady grind higher. But really looking out for the next, from a long perspective, or from an investment perspective, when you look at Bitcoin, the jury's still out for me on whether it's an asset that should be invested in. But I would look for better risk reward opportunity than getting in at 65,000 when the high is only about 4,000 away. So for me, I'd be looking around about the 50,000 level to buy dips, but a confirmation trigger for me would be a high volume candle. Ethereum continues in this upward trending channel on the daily chart. Support for this comes in around about 4,480. And on the upside, we're looking at 5,000 as the next real psychological level in Ethereum. Ripple seems to be listing aimlessly to the side. There is a slight bullish tan to it, or whatever. Well, I don't know what word I'm looking for. There's a tinge to it, I was going to say, but I don't know if that's right. But we did see a couple of days ago, we saw this sort of engulfing candle, a bearish engulfing candle to the downside, a fusion of these two candles. Yesterday's price action was a little bit more supportive and a bit undecided today. So for me, it's really posted a lower high at the same time as posting a higher low. So we are sort of forming some sort of triangle formation and looking for the break. Cardano seems to be hanging around this $2 level. It seems to be attracting it. 206 has been a previous supportive or pivotal level previously. We did manage to get up to 238, as we mentioned yesterday, but a bearish engulfing candle paid to that. Sorry, that was early in the week. The bearish engulfing candle from the 10th put an end to that. And we had a negative session, although it was very, very quiet. Looking at indices now. FTSE extended the bull run yesterday, got up to a nice high just below the 7400 level. That is the psychological level we look to break. Today we've actually probed above it, got a 7405 and rejected. We're on the back foot at the moment. So a little bit of profit taking possibly just around this psychological level of 7400. DAX, that stopped me out. That bad boy stopped me out this morning of my short trade idea. Only just, my stop was above, well, 16,125. It's been up to 16,126 and a half. So pipped me out, but I feel a little bit better now that I'm out. I don't have to stress about this one. From yesterday's bullish candle is concerning for me from a short perspective. So the trade's cut, done and dusted. Look for the next opportunity. Potentially this could be on the upside. So you know, we're sort of building into these sort of bullish trade ideas on indices. It's definitely a top in the market. But yeah, on the weekly chart, really considering where we are, there's still great potential for an extension higher while we remain above 16,031. So for me, that's probably a pivotal level to watch. We've been down this week. What's the low? 15,985. Really a close above this 16,031, or even really a close above 16,047 is positive for the coming week. It has been quite a quiet week in terms of range, a very, very small range. The Dow flirting with the all-time highs, 36,564. We're going to call it there. Just trading below there. We've had a little bit of a reversal, a little bit of a sell-off over the last 3 days. So that does look quite conclusive, but we do have support coming in at around about the 35,900 level. So watch that as a pivot today. A break below there should open up a little bit further on the downside. Support coming in there should allow the market to bounce quite nicely. We can see on the 4-hour chart that there is it does look like a pretty comprehensive impulsive move higher, maybe due for that correction back to the 35,500 level. Who knows? We'll have to wait and see how that plays out. We've reacted on the Nasdaq on the 4-hour chart. Yesterday we reacted from what's the low there? 15,900. That the high was 15,925 way back here. So that looks like a nice pivot level to watch as well. We've got these nice sort of decision levels to consider. That for me should provide some support. Make it nice and blue. And yeah, little bit of a toppy looking formation, but really has to break below there to open up the downside. So 15,925. If we recapture ground above 16,120, then that again should lend a little bit of confidence to buyers and investors in the market. S&P, similar sort of price action. We did form what's the new all-time high, which we haven't. Ooh, let's get a price label on it. No, it's still this all-time high, 4,720 remains the all-time high. This bearish candle that we've highlighted with the red down arrow is quite significant. Price action hasn't got above it. We are posting lower highs, but as I say, we've stalled around about the 4,632 area. That would be a break below there, should open up the downside a bit more, but you can see momentum is stalling with this move lower. So potential for a little bit of bullish divergence creeping in there on a short-term time frame only. Quickly run through the Aussie 200. Pretty decent day a couple of days ago, but yesterday's shooty starlight candle. We've opened up under pressure again this morning. Again, volumes dropping off as we've moved higher, so maybe it doesn't want to be going higher. China 50 under pressure again. We've got a evening doji star formation on the 4-hour chart, the reaction lower again with momentum stalling, volumes dropping off, a potential for this down move to continue. Hang Seng bearish outside candle on the 4-hour chart, indecision over the last 4 hours, and we're just hanging about waiting for the next move. Break of 25,189 should open up the downside a little bit. Nikkei a little bit better supported, but really needs to push above the 29,660 to re-challenge the highs that we had. We had 3 decent highs on this 4-hour chart. Well, 4 really, if we take them all in, a range between 29,800 and 29,950. There's a nice band of resistance sitting there waiting for these bulls to run into it. That's covers that, Joe.
Lovely. Thank you, Steve. Comprehensive as always. So let's get stuck into FX then. So really just a continuation of what we'd seen over the previous sessions, because yesterday obviously we had the holiday in the States, so there wasn't much participation from that side. But we've seen this breakout on the dollar index above this 94.74 level, and yesterday we confirmed that really with further strength to the upside. A little bit of indecision today. We are flat on the session, which isn't a bad thing at all. So maybe we'll see some sort of consolidation above this level now to see some acceptance of price above the 94.74, and that would just be more reasons to be bullish really on the dollar index. So no signs of that slowing down for me at the moment. Yes, there might be a bit of profit taking in that in the very short term, but ultimately I think it will be a case of buying on dips. And if we look at Euro USD, obviously, the flip side of what we've just seen on the dollar index, we saw a continuation lower yesterday and a little bit more weakness today, off by 0.02% as things stand at the moment. So we are approaching the lower end of this bearish channel, so we may see a little bit of cooling off. But again, I think any upside advances are likely to be capped at that new resistance level that we have at 115.25. So still looking for lower prices on Euro USD, down to our ultimate targets down here at 110.50-ish. If we look at cable, that maintained below the new what was previously support, now resistance yesterday. And if you look at how price action is performing today, we've just rallied into that level at 134.11. We're up by almost 1/4% on that at the moment, trying to engulf the previous day's losses, but it's going to have a pretty stiff task, I think, of trying to get above this level here at 134.11. So that's the key level today. May even be a case of selling into that, actually. Might consider that for the gun to the head trade today. Still looking for lower prices. As you can see, the trend remains lower. We've got a 38.2% fib level down here at 131.65. We do have a couple of big round numbers to tackle prior to getting to that level. We've got the 133.00 and the 132.00, which may form some sort of support, but there's nothing really on the left hand side around those levels to give us much confidence that they will do that much of a job. So the 38.2 is the sort of real level that interests me on the downside. Looking at euro sterling, that continues to be quite choppy, but overall trading within this bearish channel. Still looking for lower prices on that, particularly on the back of this candle that we posted on the 8th, which was a nice bearish engulfing. We haven't been able to overcome the highs that were posted on that day, and therefore lower prices, I think, can be expected. The one situation that I'm still continuing to monitor is this US dollar Japanese yen pair. We've been talking about the potential for a flag forming. We did post a slight move above the upper end of the flag, but we've got this big horizontal resistance at 114.32. So I kind of want to see both of those taken out at the same time on quite an impulsive move to get excited about that. So nothing yet. I thought we may get it then on the 10th of November, but it didn't follow through. So just watching and waiting on that one for now, because as we've said on a few occasions now, this is a very important level. If you go back all these months back to 2017 as to why that level is relevant. I think if we can clear that, then maybe we can start targeting these previous highs that were posted back here in, again, early part of 2017. So keeping a watch on that for now. That's it for me on the FX, or at least all I wanted to cover. We'll redo my charts at some point today for a fresh look at things next week. Steve, gun to the head trades from yesterday we didn't do
Don't
particularly
want to talk
well.
about it. No.
No, we both got stopped out. And in terms of form on this, we aren't doing great. We're very much flatlined pretty much throughout 2021, to be honest. We've had sort of bursts of activity to the upside and then just sort of a grind to give it all back, really, which is quite frustrating. But we are making calls live on air without much analysis going into them. We're just sort of picking something that we think could work on the session and not having much luck. So
No.
maybe the tide can turn. It only takes a winning streak of 2 or 3 or 4 good trades, and there's a big spike put in that P&L chart. So let's see if we can manage that between now and the end of the year. Anything that's catching your interest?
What was my
Yesterday you went short of oil.
yeah, stopped out and then it did come off. The stop
Yeah.
was very, very tight. Yeah. Oh, Joe, what do we do?
Well, I was going to take a look at cable just because I liked what I saw on the daily chart. We were rallying to retest the underside of this new resistance level. So let's have a look on the intraday charts to see if there's anything. Give us a bit of a clue. Let's just clear these drawings. So that's the key low that we're referring to on the daily chart. We've seen a nice rally into it there. That would have been the perfect point to have sold it. Maybe we're going to see something again like that. So let's just back it, shall we? Let's sell it at 133.96. So in front of a nice round number at 134 as well, which is always good. Let's go with a stop loss there at 134.45. And what am I going to target on the downside? Where were my targets? There's not much to target if we keep scrolling left on the intraday basis, so we might have to look at the daily
Yeah,
for
go
some
to zero.
indication. Go to zero, yeah.
Yeah.
Well, my target ultimately is 38.2% fib level. I doubt it could do it in a day, but you never know. So let's have a go, shall we? 131.65. So I'm
Okay,
looking
cool.
for nearly 5R on that. Punchy,
Punchy, like it, Joe.
but in line with the trend. Nice technical level to reference there as well. Let's see how it goes, shall we?
Yeah. I'm going to do something different this morning. I'm going to do natural gas. Weekly chart, we've got the reaction higher. The daily chart, which I really like, is this morning star formation. Really like that. Although the volume, it would have been better if the volume was a bit higher, showed real keen interest from the buyers. On the hourly chart, we've broken above the Ichimoku cloud. Again, I like that. And this top of the cloud is providing decent support. So I might be able to get a decent risk reward trade out of this, Joe. You never know. So where am I going to put my stop? I know these things are pretty volatile. I'm getting stong. Stong.
Stong. Long
I'm
and
getting
stong.
long. Oh, that's given me a little bit of a head start. Sorry about that. Try to cheat my way into that one. How does that look? No, a little bit too much. That's 3-to-1 risk reward. I'm going to bring the stop in a bit tighter. There we go. 6-to-1 risk reward. I'm buying natural gas here at 517. It's 516.60 if you look at this chart, but there's a spread there, obviously. My stop was going to be 512, which is pretty tight. Should be a little bit more, but I'm getting a little bit greedy on this one. Looking to target a move to 547. This is where we sort of like broke down from. So yeah, that's me on natural gas. I haven't done natural gas, I don't think, before. So
interesting.
yeah, that was the best. When I was analysing the markets, that's the one I really liked, that morning star formation.
All right, lovely. Well, in terms of the day ahead, then, what we can expect from the economic calendar to maybe give these trades a bit of a boost. Unfortunately, there isn't a lot, but we do have the 3 p.m. US Michigan Confidence Survey. The sentiment is expected to drop to 71 from 71.7. We have had some data out this morning. We've had the Swiss PPI out earlier. We also had some German numbers as well. So we also have some Eurozone industrial production, but that hasn't been considered as high impact enough to make it on my list of data points today. So we'll see how we close out the week. Hopefully it's been a good one for you if you've been trading. That's pretty much it from us, Steve. We'll be back bright and early on Monday morning.
Yep, lovely. Okay, mate.
Cool. Have a good one. Have a great weekend all.
Cheers.
Bye.